Mabuhay ug madayaw. I'm Mikey Saavedra and I will report the PFS. Next is Bangko Sentral ng Pilipinas. Bangko Sentral ng Pilipinas is the Central Bank of the Philippines. It was established in 1993. Ang trabaho sa Bangko Sentral ng Pilipinas kay promote and maintain monetary financial stability sa country na gina-ensure ang efficient payments and settlement system. BSP key functions include managing the country monetary policy, issuing currency, acting as a lender of last resort to banks, and overseeing the financial system.
Good day everyone, I'm Kyle Angel Viviana, and today I'm gonna discuss the duties of BSP. So, the BSP is the Bangko Sentral ng Pilipinas. So, the Central Bank of the Philippines has several key duties. Its primary objective is to maintain price stability, conducive to balanced and sustainable economic growth. It also promotes and maintains monetary stability and the convertibility of the Philippine peso. So these are the key duties of the BSP. First is financial supervision. Second is management of foreign currency reserve. Next is exchange rate policy determination. Next is liquidity management. Next is issuance of currencies. Next is lender of last resort. And last is advisor of the government. So what is financial supervision? Financial supervision is the oversight and monitoring by a regulatory body of financial institution like banks, insurance companies, and security firms to ensure they comply with established rules and regulations. So there are key aspects of financial supervisions. First is monitoring compliance. So monitoring compliance supervise, check if financial institutions are following the laws, rules, and regulations put in place by the government and the financial system. Next is risk management. A crucial part of supervision involves identifying and assessing the risk that financial institutions are taking, such as credit risk, market risk, and operational risk. Next is enforcement sanctions. Supervisors have an authority to impose sanctions on institutions that fail to comply with regulations, which can range from penalties to more severe actions like revoking a license or closing a failing institution. Next is promoting financial stability. The ultimate goal of financial supervision is to ensure the stability and soundness of the overall financial system, preventing crises and protecting consumers and the economy. And lastly is the oversight of financial technology or FinTech. Modern supervision also extends to regulations and oversight of new financial technologies and payment systems to ensure they operate safely and effectively. So next is managing foreign currency reserves. So what is managing foreign currency reserves? It is to ensure a nation's economic stability by providing liquidity to meet a country's internal obligations, acting as a buffer against external shocks, supporting monetary policy, and boosting investors' confidence. So how does it work? First, liquidity provision. Central banks hold foreign reserves, typically in highly liquid and safe international assets, denominated in major world currencies like the US dollars, euro, or yen. Second is market operations. The central banks uses these reserves to intervene in the foreign exchange market, buying or selling foreign currency to influence the exchange rate or meet international payment needs. Third is strategy development. Reserve management involves developing clear objectives, frameworks for transparency and accountability, sound institutional structures, and efficient market practices. And lastly is risk control. Reserve managers continuously monitor and manage risk through techniques such as stress testing to assess the potential impact or macroeconomic and financial shocks. The next is exchange rate policy determination. So what is that? So the role of exchange rate policy determination is to select and manage the system under which a country's currency value is set, thereby influencing its competitiveness in international trade, inflation rates, the cost of foreign debt, and the overall economic stability. So, these are the key aspects of exchange rate policy determination. First is system choice. Policymakers decide between different exchange rate systems, such as a fixed exchange rate, where the value is pegged to another currency or a basket of currency, or a flexible floating exchange rate, where the value is determined by market forces. Next is influencing price stability. By influencing the exchange rate, a country can affect the price of imported goods, which a key component of inflation. So next is liquidity management. So what is liquidity management? It is to ensure a company has a sufficient cash and liquid assets to meet its short-term obligations and operational needs, while also balancing the need for accessible funds with opportunities for investment and growth. So these are the key roles of liquidity management. First is meeting financial obligation. So ang primary role ani is to ensure a company can pay its debts, supplier, payroll, and other short-term liabilities on time. Second is operational continuity. Liquidity management allows businesses to maintain a smooth daily operations by having cash available for ongoing activities, such as purchasing inventory or services. Next is strategic decision making. By providing a real-time financial data and forecasts, liquidity management supports critical decisions such as whether to invest in new projects, pursue growth opportunities, or whether to seek external financing. And last is risk management. So it helps protect against financial distress caused by unexpected expenses, revenue shortfalls, or market volatility. Next is the issuance currency. So the primary role of currency issuance is for a central bank to supply the economy with a appropriate amount of money, like coins and banknotes, to meet public demand and facilitate economic activity, while also retiring unfit currency to maintain its integrity. So for physical currency like coins and banknotes, these are the heroes. Supply money. First is supply money. Central bank issues currency to meet the demand from banks, which then distribute it to the public for use in transactions, like mga kwarta na to karon, guys. And next is to maintain integrity. The process includes the retirement of old or unfit currency, a clean note and coin policy to ensure that the money in circulation remains in good condition and its value is maintained. Last is economic management. The quantity of currency issued is based on macroeconomic factors like GPD and inflation, reflecting the overall health and needs of the economy. So for financial instruments like bonds, raise funds Governments and corporations issues bonds to raise capital for projects to fund their deficits or for other financial purposes. And lastly is next is manage risk. Um, Issuing debt in a foreign currency can sometimes lead to lower rates and access to more investors through introduces currency exchange rate risk. And lastly is influence markets. The choice of currency for bond issuance can affect the liquidity and development of local financial markets, sometimes in cooperation with internal development organizations like the Asian Development Bank or ADB. Next is the lender of last resort. So the primary role of lender of last resort is to provide emergency short-term funding to banks and other financial institutions that are experiencing liquidity shortage and cannot obtain funds from other sources. So how does this work? First is emergency liquidity. When a bank cannot get a funds it needs from other banks or markets, the lender of last resort steps in. Next is collateral. Funds are typically provided as loans against collateral such as treasury securities. So last is penalty rate. The interest rate charged on these loans is often a penalty rate designed to discourage overuse and ensure that the borrowing bank is truly in need. And last is the advisor of the government. So the primary role of the advisor of the government is to provide expert advice, research, and strategic counsel on policy, governance, and political matters to support decision-making and improve government effectiveness. So the key responsibilities first is the policy analysis and development. Advisors analyze existing policies, research potential solutions to current issues, and help develop new policies aligned with government objectives. Next is strategic counsel. They provide expert guidance on public policy, governance, and the practical and functional aspect of government operations. Next is political perspective. They offer a viewpoint that aligns with the governing party's priorities and the minister's political outlook, which is crucial in a complex political environment. Next is communication and media support. They can assist with media relations and communication strategies to convey government messages effectively. Next is capacity building. In some roles, advisors help build the capacity of government ministries in policy development, strategy planning, and implementation. And last is coordination. They coordinate efforts with other government bodies and international partners to ensure comprehensive and coordinated policy work. That's all. Thank you.
Mabuhay ug madayab. My name is Micaela Marimon and I'll be discussing the financial statement categories. The financial statement categories are the distinct segments within a financial infrastructure or an economy comprising financial institution, markets, and instruments that collect and able to efficient mobilization, allocation, and management of financial resources. Example, ang banking institution like commercial banks or rural banks. And ang kaduha is non-banking financial like non-banking financial institution like insurance companies, finance companies, And number 3 is financial markets like stock markets, bond markets. And ang kaupat is financial instrument like mga stock, bonds, mga bonds. So, ang number 1 sa financial statement categories is expand commercial or universal banks. So, muna siyang these are the large banks that offer a wide range or banking services including ang retail bank, corporate bank, and invest na bank, and and other financial services like they're corporate po silang mga clients. Example diri sa Pilipinas kanang BDO, Unibank, Unibank, and Bank of the Philippines and Island like BPI and Metrobank. And number 2 is Thrift Bank. Mao ni siya nga bangko nga primarily focus on saving accounts, small loans, and other thrift products aimed to promoting like savings or providing po sila affordable credit to the middle and lower income na sectors. Example, kanang PS Bank or Philippine Savings Bank or Bangko ng Pilipino. And number 3 is commercial banks, and mo ni siya nga bangko nga provide siya wide na range of financial service such as deposit accounts, loans, and other financial nga product to general nga public and businesses. Sa number 4 is rural bank. Muna siya meaning sa bangko nga Number 4 is rural bank. Meaning is the bank that primarily serve rural is community, small farmers, and mga entrepreneur. Then nagafocus sila sa mga agricultural and mga microfinance services. Example din sa Pilipinas is Rural Bank of the San Jose or Rural Bank of the Tarlac. Then number 5 is specialized banks. Meaning pod ani is the bank that focus on the specific sector or services such as development banks, mga cooperative nga bank or mga Islamic bank. Like example, Philippine Development Bank of the Philippines or ginatawag na siya ang DBP. And number 2 is Land Bank of the Philippines or ginatawag siya LBP. Number 6 is offshore banking. Offshore banking is services na offered by banks located siya sa outside one's home country. Or typical nga facilitate sila sa mga international finance international invest and tax planning. Example is while the Philippines itself it's not major to offshore banking hub, some Filipino banks have offshore sub or branches or offshore in the financial centers like sa Hong Kong or Singapore. The last one is the e-banking. E-banking is banking that through that internet or mobile apps like nagalaw sila customer nga dito sila sa nagalaw sila customer nga through transaction online like mga example BPI online, BDO or online banking or Union Bank, and that's all.
Mabuhay mo dayaw. Investment banking. Investment banking involves advising organizations of merge and acquisitions as well as a wide array of capital raising strategies. Naidura ka investment banking. Investment banking function and kind of offering. Ang investment banking function kay person who can carry out underwriting function are called investment banker. Ang pinaka-important na ilang duties as a investment banker is to provide financial guidance na support sa corporation para ma-determine kung unsa ang kwarta na kailangan o pila ang ilang erase na kwarta. Next is kind of offering. Na ay tulo ka kuan ang offerings. First is the primary na naga-process from the sales of security go to the issuing corporation. This kind of offering raise.
The Security and Exchange Commission, or SEC, has one big mission: to keep our market strong, fair, and competitive. They regulate businesses and, most importantly, they protect investors like you and me. In fact, they were reorganized in the year 2000 to improve their efficiency and integrity. The Security and Exchange Commission, or SEC, has one big mission: to keep our market strong, fair, and competitive. They regulate businesses and, most importantly, they protect investors like you and me. In fact, they were reorganized in the year 2000 to improve their efficiency and integrity. The SEC has four main functions. First, company registration and monitoring. They make sure local and foreign corporations follow the law. For example, if you want to start your own company, guess where you need to go? That's right, the SEC. Second, capital market development and regulation. They oversee brokers, dealers, and even buying and selling of stock and bonds. Third, support services. These keep their own operations smooth through research, administration, and financial management. And fourth, enforcement. This is where they strictly implement financial laws and support fraudulent companies.
Mabuhay ug madayaw. My name is Catherine C. Dolores, and today we'll be discussing about the risk associated with stocks. What is risk associated with stocks? The chance that the value of your stocks will go down and you might lose some money. It means that when you buy stocks, na ay chance na ang value na baba instead na mo pataas. Kung kana mahitabo, the money you invested could be worthless. You might lose some or all of it. For example, kung mamalit ka og stocks for 100 pesos, the market now thinks the stock is worth only 80 pesos. Kung ibaligya, makuha lang nimo ang 80 pesos and mawalan ka og 20 pesos. So, baka malugi ka kay imong pagpalit kay 100 pesos. And here we have different kinds of risk. First, we have risk and reward trade-off. What is risk and reward trade-off? It means kung gusto ka na ay chance na maka-earn og higher rewards, you usually have to take higher risk. And napo siya chance nga ma-lose imong money. If you want safer investments with less risk, the rewards are usually smaller. For example, buying stocks is riskier. Price can go up or down, but naay chance maka-earn kag more. And here we have another example. Putting money in a bank savings account. Very safe, but makuha lang nimo is low reward. Kay small interest lang siya. So, in short, more risk is more possible reward and less risk is less reward. Next, we have market risk. It means there is possibility of losing money due to factors that affect the entire financial markets. For example, imagine you have a small store in a market. Then one day, naikusog na ulan. Tungod ana, gamay na lang ang tao or customer ang mamalit. That's what market risk is like. Because sometimes it can make almost investments lose value at the same time. And there are two types of market risk. First, we have the unsystematic risk, also called company risk. This is the risk that affects only one company or industry. For example, they have poor management decisions or a competitor's success. And number two is systematic risk, also called market risk. This is the risk that affects the whole market or economy. For example, interest rates changes and natural disasters. Next, we have sector risk. What is sector risk? It is the chance that investments in a particular sector will lose value kay tungod ang sector performs poorly. So, ang sector is a group of companies or activities nga same og trabaho or belong sa same og industry. For example, if you invest sa technology stocks and the tech sector faces problem, the value of your investments may drop even kung ang tanan-tanan na stock sa market is doing fine. So in short, ang market risk affects the whole market and sector risk affects only a specific industry. Next, we have liquidity risk. What is liquidity risk? It is the risk na dili nimo dali ra mapalit or mabaligya kung walay nagakos sa iyang price. For example, imagine you have a piece of land. If you suddenly need cash, it might take a month para makakita og buyer and you might even be forced to sell it at much lower price. That's liquidity risk. Next, we have interest rate risk. What is interest rate risk? It is the chance that changes in interest rates that will cause you to lose money. It happens when interest rates go up or down and affect the value of your investments, especially with bonds, loans, or savings. For example, nagbutang ka og kwarta in a bond that pays 5% interest. If market interest rates go up to 7%, new bonds will give higher returns. Your bond paying only 5% becomes less valuable. And if you sell it, you might lose money. Next, we have credit risk. It is the possibility that a borrower will not be able to repay the money they owe. So, ang credit risk kay kung magpahuram ka og kwarta sa tao na ay possible dili nila mabayaran right on time or dili na jud nila mabayaran. For example, kung ang bangko nagpahuram og 10,000 to a person and that person loses their job and cannot pay it back, the bank faces credit risk kay it may lose money. Next, we have purchasing power risk, also called inflation. It is the risk that the money you have or the returns you earn from the investments will lose value because prices of goods and services rise over time. So, naay chance na imong kwarta pohon or sa future, dili na nimo mapalit kay dili na siya same og price karon. Kay magtubo-tubo naman siya over time. For example, you save 100 pesos today. A burger costs 100 pesos karon. Nya, pagka next year, tungod sa inflation, the burger price goes up to 120 pesos. Your 100 pesos can no longer buy the burger. Last but not the least, we have the call risk. It is the risk that a bond will be called, paid off early by the issuer before its maturity date, usually when interest rates goes down. For example, you buy a bond that pays 6% interest rate for 10 years. Then after 3 years, ang interest rates kay nibaba sa 3%. So, ang company naka-decide na tawagan para ma-redeem ang bond early. That is the call risk. Now, let's proceed to the next reporter.
Mabuhay ug madayaw, Jasmine Antepuesto. So karon ang akong i-discuss is stock in relation to economics. Stock market is closely nakatali or nakadepende siya sa economy. Like nga nila siya. Economy, if ang economy is strong, ang stock prices pod is mutaas. If ang economy is weak, the stock prices also mubaba siya. Ano na siya. The second is the law of supply and demand. Stock market, like goods and service, nagafollow sila og mga batas. Sa demand, ang ilang gina-follow is if ang price kay mutaas, of course, ang mga tao gamay lang ilahang paliton. If mubaba ang prices, mo na pud nang time nga bayaghan ilahang paliton. Samantalang sa supply is if ang price gani mo taas, mas mubuhat sila og mas daghan nga product or services, kumbaga. If ang price gani is mubaba, gamay lang sa dilahang buhaton, ingana na siya. Economic factors is investment decision, nakadepende siya sa internal o external sa isa ka company. So, ano na siya? Internal factors is within company's control, like launching new product, investing in new equipment, expanding distribution, adjusting prices, ano na. Internal factors is outside the company's control. Political changes, technological, legal environment, geographic, o overall economy. GNP and GDP, there are measurement of a country's economic performance. Gross national product, value of goods and service produced by Filipinos. It's either nasa sila sa sunod sa country or nasa gawas. While ang gross domestic product, values of goods and service produced within the Philippines. It's either Pilipino man siya or foreign or mga tagalaing bansa. So, the difference is GNP based on nationality siya, more nag-focus siya sa nationality, whilst the GDP is based on kung asa siya nakalocate or sa location. The next is Philippine Consumer Price Index. The PCPI tracks changes in the price of everyday goods and service. So ano siya? Inflation, continuous rise in price, money value is nagababa po siya. If taas gani ang mga prices, it means to say ang value po sa money is mababa. Deflation, if mo baba ang price sa mga product dera, ang value po sa money is mutaas siya. Nga na ang ihang cycle. So, supply of money. Sa supply of money na ay tulo category, which is M1 narrow money, cash plus checking deposit. Si M2 po is board money plus M1 plus savings accounts plus time deposit. Sa M3 po is man siya ginatawag na domestic liquidity. M2 plus other financial assets liability. So ani na siya? Too much money, it means inflation. Too little money is magpahinay po siya sa economy. So, the 7 is monetary policy. Siya. Bangkong Sentral ng Pilipinas, manage money supply through expansionary policy. It means increase ang money. Lower interest rate by government securities, lower bank service requirements. Ang goal ani niya is to encourage spending and ang mag-invest pa sila. So, restrictive policy, reduce money. Rise interest rates, sell government securities, rise bank service requirements. Ang goal ani siya is mag-reduce og inflation. So, interest caused by borrowing money or reward for lending a money. If manghiram ka, interest is mo na ang imong bayaran. If ikaw po na nagpahiram, interest is mao na siya imuhang na-earn or imong nakita. And the last topic is the business cycle. So, sa business cycle na siya 4 siya ka stages. And ang pag-work ani nila is mura sila og roller coaster. So, sa expansion, mao ni siya ang padulong pa lang sa babaw. Samantalang si peak is na siya sa pinakababaw jud. Si recession is going down, samantalang si truth is sa bottom. So, diba, sa roller coaster, diba, magtuyok man niya. If magtuyok siya, diba, ang pinakababaw ato is mao to siya si peak daw kunuhay. Samantalang si expansion is pataas para siya sa balik. Siya ang mupuli ato sa top. So, akyat para siya balik. First si top, first si peak, second si expansion, and then si recession po siya is ikatulo, and while si truth is sa bottom, sa mo siyang pinakababa. Mo na siya, ano siya mag-work.